In this video, we look at how to reduce tax on pensioners by highlighting one significant tax problem that pensioners face: the drawdown of pensions. At the moment, withdrawals through pension drawdown are taxed at an emergency rate, resulting in millions of pounds in overpaid tax. We recently dealt with a client who had suffered a £6,000 tax charge because emergency tax had been paid on his pension drawdown. We managed to recover £4,000 of that tax for our client. Recent HMRC figures have shown that in the first 6 months 2023, £104 million was refunded in overpaid tax, affecting over 30,000 people who had drawn down funds from pension pots. The average refund was £3,551. Automatic refunds are made at the end of the tax year if the taxpayer does not make a claim. But these refunds will not start arriving in the bank accounts of pensioners to around August to September 2024, and we suspect that claimants would rather obtain their refunds earlier. Please stay until the end of the video, where we'll explain how you can make a claim to obtain a tax refund if you have drawn down your pension during the 2022 to 2023 tax year. It is important to take action if you have paid too much income tax on a flexibly accessed pension payment by claiming a refund if either the pension pot has been flexibly accessed but not emptied, or you will not be taking regular or flexible payments before the end of the tax year, or if the pension provider is unable to make a tax refund. Tom Selby, head of retirement policy at AJ Bell, said, "It is simply unacceptable that the government has failed to adapt the tax system to cope with the fact Brits are able to access their pensions flexibly from age 55, instead persisting with an arcane approach which hits people with an unfair tax bill, often running into thousands of pounds, and requires them to fill in one of 3 forms if they want to get their money back within 30 days. One way savers planning to take a single withdrawal in a tax year can potentially avoid the shock of a big overtaxation bill is by taking a notional withdrawal first. This should mean HMRC is able to apply the correct tax code to the second, larger withdrawal. HMRC has now issued guidance on how to claim back a refund in the current tax year on an overpayment of tax when a pension has been flexibly accessed. An HMRC spokesperson said, "We will automatically repay anyone who pays too much because they are on an emergency tax code. Individuals can claim back any overpayment earlier if they wish. Pension savers can withdraw money from their pension pots from the age of 55, but these withdrawals are taxed at emergency rates and do not take into account individuals' earnings and tax thresholds. Under pension drawdown rules, the first 25% of the withdrawal is tax-free, the balance is taxed at the individual's normal tax rate of either 20% or 40%. Anyone who have flexibly accessed all of their pension should notify HMRC using Form P53Z. For those who have drawn down all of their pension and stopped working, use Form P50Z. Before you apply for a tax refund, you will need to inform HMRC about the income you expect to receive in the tax year the pension drawdown took place. Estimated figures can be used if final figures are not available. If you fill in a self-assessment tax return, do not include any estimated self-assessment income in this claim, unless you want HMRC to include this in calculating the repayment. HMRC recommends that claims are made online, but it is also possible to make a claim using Form P55. We believe that pensioners are going to be confused about which form that they should make the claim, so we, at Truman Brown, are offering a service to claimants to obtain any overpaid tax on the drawdown of their pensions. If you require our assistance, then please leave a comment below.